Look, this is Peter here. I have the privilege this wonderful day in London to speak to Keith Coughlin, the Managing Director and CEO of European Metals Limited. Hi Keith, and how are you in Australia there?
I'm well, thank you, Peter. How are you in London? I believe it's nice and warm and sunny there.
It's nice and warm in Leicestershire where I am, up in the other parts. I think it's a bit wet down in London, but yeah, I'm having a good time here.
Good to hear.
It's good to have you back, Keith. Now, ShareTalk have been following you from, I think you were sub 5 pence at one stage, and now the stock price is up at 34 pence. So
Yeah,
investors have been following you and following your story, and you've been doing exceptionally well.
it's been a good ride. We've had our ups and downs,
Yeah,
but along the way, the project is going along very nicely and the story's coming together very well.
excellent. Now, you came out with the significant capital savings review regarding the scoping study, which is absolutely fantastic news. The amount of, well, in US dollars terms, you're looking at 85 million pounds of savings. That's absolutely staggering. So I wanted you today to just go over that to, encompass what happened, how it happened, and how you've managed to make such a significant saving, if that's possible. And then we've got some more
Sure, Peter.
questions after that.
Sure. Okay. Well, just to clarify, it's 85 million US
US,
dollars.
yes.
Okay.
Hmm.
And to put that in a context so everyone understands how significant a number that is well in excess of our current market capitalisation that we've managed to reduce our pre-production capital costs by. So it's a big number anyway, but
Yeah,
if you take the context of the size of our company, it's a very big number because it's bigger than our current market cap.
indeed.
So it's come about in two main ways. Firstly, and these are savings that we've identified over the projected costs that we published when we did our scoping study in April of 2015. And the savings are in two particular areas. Firstly, or the reductions are in two particular areas. Firstly, our mining costs. So we now look like we would develop the northern and western part of the ore body initially. And the advantage of this is that it's much shallower, higher grade lithium mineralisation. So we're into mineralisation right from the surface, which means you don't have to move as much dirt and, sink a decline shaft and what have you, and all that upfront capital cost before you are into the ore body. So that's where the mining cost has come from, and that's in the vicinity of 38 million US of reductions. And the second part of it is 47 million approximately US of reductions in regards to the construction of the lithium carbonate plant. And a big portion of that reduction is due to the fact that we no longer believe we need to build a substantial sulfuric acid plant to feed the lithium carbonate plant, simply because in Europe, sulfuric acid is readily available and very cheap, and so there are other sources that we can get this from, and we don't need to build that ourselves.
Okay.
So they're the two main inputs to these reductions that we've put out there.
Excellent news for shareholders there, Keith. Now, I'm a big tech fan, so I'm going to have to diverse a little bit here. And obviously, regarding the lithium side of things, there's all this talk now about global and European car manufacturers moving towards electric cars. So, how are you regarding the battery lithium side of things, and how close are you to be able to say to these car manufacturers that we're going to be at this stage ready to be able to supply you guys?
Okay, well, I think in terms of how close we are, we're within 6 months.
Wow. Okay.
We believe that we will conclude our preliminary feasibility study early in 2017 and be able to move with confidence into our bankable feasibility study. And I believe at that stage that end users within Europe will take us considerably more seriously because we have that higher degree of certainty and comfort with regards to the viability of Sinovac. And it's interesting that you pick on that with European car manufacturers, because this is a very significant part of our story.
Yeah.
the world, with regards to EVs, started talking about Tesla, obviously,
Of
and
course,
what
yeah.
impact that was having. And it wasn't really until Tesla put out there its pre-order figures for the Model 3 back in, I think, February, that the mainstream car manufacturers started taking this space seriously.
Indeed.
Since then, since Tesla put out those numbers, we've seen all of the major European car manufacturers enunciate very serious EV strategies going forward. And to put it in the context of how big that is, Tesla, who've done a great job from our point of view, manufactured, I think, 52,000 vehicles in 2015 in total, whereas Volkswagen manufactured more than 9.5 million in 2015. So that'll give you some idea of the scope that we're
Yeah.
talking about between Volkswagen and Mercedes and Porsche and BMW, just to talk about the German
Yeah.
manufacturers. And then there are other European manufacturers who have also started talking about this. So I believe that the demand out of Europe for batteries for EVs has not been factored into the numbers you see being quoted globally for forecast lithium demand. And I believe that if we can demonstrate a long-term supply alternative within Europe, within the EU,
Yeah.
to these people, that's going to be very valuable for them. I think there's going to be a squeeze on lithium and lithium products. The Chinese are not going to be selling any of their product outside China, I don't believe, because they have tremendous demand for it within their own country. And so
Absolutely.
it needs to come from somewhere else.
Yeah.
Europe has been quoted for some years as being the second largest importer of lithium globally, with about 22% of the market. But that's before the initiatives of these automobile manufacturers. And I believe that number is going to rise dramatically.
I completely agree with you on that scale as well. I mean, you're in a very fortunate position now that you've got the largest lithium project in Europe. Now, there's, like you said, there's going to be a demand a squeeze. I'm going to say there's going to be a demand shortfall, Keith. That's how far I'm going to push it, in the sense of
Yeah.
there's going to be more needed than there is that you guys and everybody else in Europe can actually supply for these manufacturers when they're all going, we need some, we need it now.
Yeah, I think you're right. And the fact that it's a very large deposit is significant, because in order to have the confidence to go and build a very large lithium-ion battery plant in Europe, the builder wants the confidence that they have long-term secure supply of the raw materials.
Indeed.
So Sinovac, we believe the three greatest advantages of Sinovac are: number one, its size,
Yeah.
large in Europe, about the fourth largest non-brine deposit in the world. Secondly, the fact that it will be a very low-cost producer of lithium carbonate, and that's largely due to the byproduct credits.
Yeah.
And thirdly, as we've just touched on, the fact that it is located there in the middle of Europe, in the EU, surrounded by those car manufacturers, and also surrounded by people like LG and Samsung and
Yeah.
other battery manufacturers as well.
Yeah.
You know, Samsung has been talking over the last couple of weeks about building a mega factory, lithium-ion battery factory in Hungary, which is, very almost a neighbour of the
Yeah.
Czech Republic.
Yeah, I was going to touch on that because not only have you got all the manufacturers around you, but because you're in the centre of Europe, you've got all the infrastructure there. So you can just take things and move things around logistically. It's going to be so easy, rather than other people that are in other parts of the world that is having to build infrastructure to get the product to the client.
Exactly. So Sinovac is located in an historic mining area. There has been tin mined here for in excess of 600 years. So you can imagine the infrastructure that has grown up over that period of time
Yeah.
around this area.
Yeah.
So we have two rail lines. One's a kilometre from the deposit, the other's 4 kilometres. There's power, there's water, there are highways, roads, etc. There's a ready and willing labour force. So yes, all those things are already there in place.
Okay, so we've already got you at the low end of the cost curve, and you've made further reductions here, Keith. Yeah. So with regards to the staff and the workforce, how does that translate regarding costings, and how cost effective are the staffing of these projects for you?
Well, the Czech Republic is part of the EU,
Yeah.
but they're still on their own currency.
Yeah.
And it is in general terms quite a cheap place to do business.
Yeah.
I wouldn't be able to compare the numbers with UK, but if I think about in this part of the world, if I think about what a geologist working in Western Australia would cost me versus a similar person in the Czech Republic, I think you're talking about a multiple of about 3 times the relative cost.
Right. Okay.
So all of those things will assist
Yeah.
with making it a low cost producer.
Brilliant. Now we've already touched on byproducts, and you also have the largest undeveloped tin project there.
Well,
So that's
that
going to
is
help.
true. That's going to help a lot. And I don't know if you've watched the tin price over the last few months, but it's been steadily on the increase,
Yeah.
mainly due to factors in China and Indonesia and Myanmar with regards to the supply of tin. So when we did our scoping study 18 months ago, and bearing in mind we used a tin price then of $22,500 a tonne, and today it's about 20,000. When we did that scoping study, the per annum revenue from tin out of Sinovac was about 95 million US dollars.
Right.
So it's almost back at that number now. Now that's a significant byproduct. I mean, it's almost a misnomer to call it a byproduct.
Well, you're gonna have to just give it another name and say, look, Sinovac 2, the tin project, and give
Yeah,
it,
well, we'll call it a potion.
yeah.
But what I think is worth pointing out with regards to that, sometimes when a mine is producing more than one metal or has more than one product, you can get a complication where there's a trade-off between producing one or producing the other.
Yeah.
With regards to Sinovac, we don't have that problem because the tin and the tungsten, for that matter, the tin and the tungsten come out of the process right up front in the first stage. So that's part of a very simple gravity separation process right at the front, and it doesn't in any way impact what happens in the lithium carbonate plant down, further down the process route. So we can produce this tin concentrate right up front. It's very saleable, and all it does is dramatically reduce our overall cost of production of a tonne of lithium carbonate.
Excellent. Now, Keith, obviously you're still doing a lot of work on the Sinovac project. Do you see the scope for further upgrades regarding that mine?
Well, the mine is still open in most directions, or sorry, the resource is still open in most directions. And, we have a stated predominantly inferred JORC resource in the vicinity of 5.7 million tonnes of LCE. So it's a very big inferred resource, inferred and partially indicated. On top of that, there is a JORC standard exploration resource of another 350 to 450 million tonnes of lithium at about the same grade. And that's in the exploration category. Now,
Right.
but JORC exploration,
Yeah.
if we were of a mind to want to go and convert that exploration target into our inferred or ultimately into the indicated category, we have a high level of confidence we would be able to do that. And that would be another 3.5 to 4.5 million tonnes of LCE equivalent, making it 10 or whatever million tonnes of lithium carbonate equivalent, which would well and truly make it the largest non-brine deposit in the world. Now, that's not a priority for us, and the reason it's not a priority is that the resource is already well and truly big enough as it is to supply Europe with lithium carbonate for many years to come. But it's comforting to know that it's a mine. It will be a mine that could continue to produce long after I've left the planet.
Now, Keith, you're already listed on the ASX and AIM. Is there any plans or requirements for any funding going forward? That's always a question that private investors ask. Have they got enough money to carry forward the plans, and are they going to come back and need money short term?
Um, so yes, we were always listed on the ASX, and we dual listed on AIM in December of last year,
Yeah,
and that's been excellent. Been well supported in London, and it always made sense to us to list on AIM given where the project is.
yeah,
Just within the last 2 weeks, I've been doing some work with some German PR people and research writers, and we now have a much more active presence on the German exchanges as well.
yeah,
So we've been notionally listed on Frankfurt and Stuttgart and Hamburg for a while,
yeah.
but in the last couple of weeks, and mainly last week, we've seen significant volume on a Frankfurt exchange as the Germans start to learn about this project and start to invest in it. I mean, the project is almost in Germany.
Yeah.
It's it's right on their border. In fact, the deposit extends into Germany, and just in the last week, the German investors are starting to take notice. In
And
terms of in terms of further capital raising, we will need to raise some more money at some stage to conclude the PFS and get into the next stage. We don't have any urgency with regards to that. We've got enough in the bank at the moment to see us through immediate requirements, and at the right time, we will go and raise some more money.
well, I completely understand that. I think it's significant what you just said there about the German investors are starting to take note, and indeed they should, because you're going to be supplying the majority of their, you know, global car manufacturers at some point in 2017, 2018.
Well, I believe so. The other thing that's significant in Germany is that there is a very strong acceptance of EVs, a very strong acceptance of renewable energy, and therefore the requirement for battery storage for renewable energy. And so much so that the German government has taken a very active role in this. There has been €1 billion pledged by the German government for subsidies for EV buyers in Germany, and another €300 million pledged to help build EV infrastructure across Germany, things like charging stations and that sort of thing. And when you have governments creating those initiatives, it encourages the take up of a new technology. It just makes it easier for the average consumer to be able to go and buy an EV, know they're getting it at the right price, and that they're going to be able to use it effectively and conveniently throughout the country. So I think that's why we've seen German investors embrace the stock, become significant shareholders over the past week, is because the overall acceptance of this technology in Germany is as high as anywhere else in the world.
Yeah, I think it was only a couple of weeks ago, or maybe a week ago, I was reading about Daimler AG plans to sell all electric battery cars in Germany under the Mercedes brand. So they're definitely quick to grasp the opportunity there.
Well, they are. Daimler are building a new battery factory in Dresden, which I had the pleasure of touring in June.
Yeah,
And they already produce there, apart from batteries for EVs and hybrids, they also already produce there what is effectively a power wall, i.e. a home and business battery storage unit that is branded Mercedes. So Mercedes-Benz, and not a lot of people know this outside Germany, Mercedes-Benz have a division called Mercedes-Benz Energy Storage,
yeah,
and they are selling, and have been for some months now, they are selling Tesla-like Powerwall units
yeah.
into the German market even as we speak.
Wow, wow. The other thing I noticed, I'm not sure how you guys will get involved in this bit, is that Germany apparently, or I'm not sure you can confirm this maybe because you're nearer to the country than I am, they're testing electric highways for trucks. Is that correct?
I believe so. I haven't actually physically seen that, but I've read various articles with regards to it. There is also talk about having lanes on autobahns
Yeah.
that solely for the use of electric vehicles. Normal internal combustion engine cars are not allowed to drive in these lanes. They're talking about having large sections of the middle of big cities off limits to petrol cars and diesel cars, only available to hybrids and EVs. And I believe in Denmark, in Norway, that's already a reality in some areas.
Wow, it just sounds to me like you guys have hit a sweet spot, and it's only going to get better for you going forward, there, Keith. Now, Keith, I've covered all my questions. I think the Synovec, obviously, you've covered regarding what it's doing and the tin project, etc. Is there anything I've missed, or anything else you want to cover and talk about regarding Synovec and what EMH have got to what the shareholders have got to look forward to over the next couple of months?
Look, I think you've covered pretty much everything. The only thing I would add is we've made two pretty significant announcements in the last week.
Yeah.
On the back of what was up until that point a fairly quiet news time.
Yeah, because you've been busy doing all this.
Yeah.
Yeah.
It's been anything but quiet operationally.
Yeah.
I can assure you. But the shareholders should know that there's a lot of news flow to come. There's a lot more drilling being done and drill results therefore to follow. And just as we reported yesterday on one aspect of the PFS, that is these pre-production capital reductions, there are aspects of the PFS that we will be able to report on over coming weeks and months as well. So I think there'll be some good news flow, certainly more active than it has been over the last couple of months.
Well, you've laid out your strategy, Keith. The share price is up more than 240% year to date, making you one of the strongest performers on AIM. And there's more to come. So for shareholders that are invested, you've rewarded them handsomely. And I think going forward, there's clearly opportunity for those that are still tentative to invest should they wish.
Well, I think so too. And there is one further thing to just touch on with regards to what you've just said about the increase in the share price. Sometimes when you see a stock run up as hard as that, people can feel that they may have missed the boat and, it's all done. I just encourage people to have a look at the company on a valuation basis as compared with, all of our peers, particularly on the basis of enterprise value per tonne of resource. And, on that basis, we've still got a long way to go.
And indeed, I would add to that caveat as well, to look at what's going on regarding EVs and autonomous vehicles as well, and also regarding the mobile and tech industries, that lithium, ion batteries, etc. Technology is what's going to be leading everything forward. So you guys are in the middle of Europe, and there's not many other resources out there that are of that size that can provide all of those different companies with lithium that's required in the next 4 or 5 years. So
we're in a unique position. We're very lucky to be there, and we're working very hard to make the most of that opportunity that we've been given.
Indeed. Right, Keith, I've covered it there. Thank you ever so much for coming back to speak with Share Talk. We look forward to speaking with you again. We've been following you now for a little while, and we look forward to speaking to you in the near future. And don't forget, we do some shows up and down the country, so it'd be great to get you in front of some of the private individuals as well at some point.
Yes, look, I'd look forward to that too. I'll be back in London again in the not too distant future. And in Europe, and we can certainly look at connecting on that basis.
Indeed. Look forward to that. That was Keith Coughlin, CEO and Managing Director of European Metals Limited, ticker symbol EMH. Thank you, Keith. Speak soon.
Thank you very much, Peter. All the best.
All right. All the best. Take care, sir.